Assalamu alaikum and Ramadan Mubarak to everyone. I hope you're all doing well and keeping safe in these difficult times. Welcome to this inaugural session of Islamic Markets series of live webinars. My name is Daud Vicary and I'm the chairman of Islamic Markets Advisory Board. Islamic Markets live webinars is an interactive platform for the global Islamic economy that will convene leading experts and market practitioners with the purpose of addressing the key issues facing the industry and sharing the latest insights and market developments. In short, sharing knowledge through collaboration. Before I introduce our guest speakers, I'd like to go over a few housekeeping rules for this session. This session will last just under in total and will allow about 15 to 20 minutes for questions from the audience. How do you ask questions? Well, on the top right of your screen, you will see a Q&A box where you can type and submit your questions at any point at all during the webinar. We will then choose a number of questions which we will address as a team towards the end of the session. We always value your feedback and we invite you to leave your rating, comments and constructive suggestions in the box below the screen, again at any time during the webinar. Coming back to our speakers today, I'm honoured to introduce our two guest speakers, Daud Noripah Kamso joining us from Kuala Lumpur and Khalid Howladar from Dubai. Daud Noripah, Khalid, thank you for joining us and welcome to the Islamic Markets webinar. Today, the topic for discussion is what COVID-19 means for the global Islamic economy, the threats and opportunities. And without further ado, we're going to launch into the first question, which I think Daud Noripah is going to get us started on. And that question is, what are the major threats facing the global Islamic economy and which regions are most at risk? Noripah, over to you.
Thank you very much, David. I'm feeling very blessed sitting here versus the 31 million jobless people globally out there. And it's really unthinkable, the sudden economic paralysis probably to the contemporary economies. They need to think on how the economy needs to be restructured to service the mankind and rebuild in a more humane way. So on what are the major threats facing the global Islamic economy, I've got three threats from the perspective of a global economy. The first is resistance to change, meaning it's back to the old as the old normal. Second is leadership and global coordination. And third is the resurgence of another pandemic. On the resistance to change, we are now at a T-junction. So if we actually turn to the right and quickly respond, we will get a very good outcome with a reduction in collateral damage. But if we actually turn to the left and not responding as quickly, that would be a suicidal outcome. So I'm really excited as I turn to the right. And when I started seeing how the planet is healing from Amazon straight to India in the CNN and also in the pictures, I can see the clear skies and sea and the rivers. And my biggest fear now, if people do not change, after the lockdown, the factories as well as the manufacturers will go back to pollute the rivers and the skies and the sea. So this will provide a threat to the 2030 SDG on the climate change. On the second threat, when we talk about leadership and global coordination, this is a real threat, I think, because the world is in limbo. There's no leaders in this world. No one is in charge. In fact, what I'm seeing now is a major blame game. The airlines are suing the oil sectors and United States are suing China. I can see there's going to be tragic bankruptcy as well. So from standpoint of leadership, we probably see in the battlefield the mind and the heart of China as it exhibits the facial mask diplomacy. And the third threat is the resurgence of another pandemic in 2 to 3 years, we need to build an economic system that will not threaten collapse of at the next sign of pandemic. I imagine that we are at a war, and the aftermath of a war will provide us some lessons. So one of the lessons we could probably reflect on is what we can learn from Hiroshima. They reverted to humanity. So companies that has gone through war like Japan, South Korea, and Germany, we can see that they have been managing the pandemic very well. And as I started to link these three broad threads into the heart of the Islamic economy, which has the objective of justice and equality, the Islamic economic system is guided by ethics, risk sharing, certainty, and underlying assets. So instead of market forces, the Islamic economy focuses on collective welfare. Ethics will dominate it. Wealth must be circulated at all times. Muamalat would be the principle, and everything that we want to do is permissible unless it's prohibited.
Noripah, thanks for those opening remarks, and you've opened up very, very nicely, because I think there are lots of questions and follow on that I would like to interject on, and I'm particularly concerned about how we adapt to the change. We're already seeing in certain parts of the geography the rise of nationalism, as opposed to looking at this on a global basis. And I'd be interested in hearing your views, Khalid, on not only what are the threats, but are these threats sort of equal everywhere around the world, or are there some particular concerns geographically as well?
No, absolutely, Daud. And first, Ramadan Kareem to the audience, and my sincere thanks to the team at IslamicMarkets.com for putting together such I think, an informative webinar. I'm actually quite concerned, and I'll give my concerns, like, as you say, Daud, in the global context, and then sort of drill down into sort of the Gulf versus Asia, which are the two sort of key centers. Some of that nationalism that you've highlighted, I think, is a very serious risk. Previous to, let's say, the phenomena of Trump and Brexit, we were living in a more multilateral type of society and economy, where countries were integrating together, supply chains, the world collectively was sort of having a more collective growth path. On the other hand, what we're seeing now, that division between countries, that fragmentation of supply chains, where emerging market countries typically looked towards the West for growth and consumption in these markets. However, now the fragmentation means that these countries can no longer rely necessarily on the US or even now China as the main engine of growth. Countries have to be more resilient. And so a lot of those export-driven agencies and businesses are ones that may face a bit of backlash in this sort of more nationalistic and fragmented environment. And going back to what Noripah said, that sort of blame game or xenophobia will lead to, I think, more fragmentation of that global growth. Now, Islamic markets, because they have a different unifying philosophy, can they sort of form stronger connections in this? That's something maybe later on we'll come back to. But I am, as you say, concerned about the fragmentation of the global economy. Going to sort of local markets, we have two very different engines of the Islamic economy, broadly the sort of the Gulf and Asia. And we've seen the worldwide drop in consumption, where oil prices have completely taken a pummeling. You now have, Gulf countries running massive deficits. Now, alhamdulillah, they have managed to build up a large stock of sovereign reserves to carry them through this downturn. But on the other hand, the future, when you think about renewables and energy, isn't bright. So the Gulf really needs to push forward on these diversification efforts and challenges. And that's something that I think they will focus on. And the issue is, even with the non-oil economy, a lot of the liquidity and the funding that comes into the Gulf economies derives from oil. So if there's less money coming in at the top of the supply chain, then there's less for other sectors of the economy. So you're seeing a massive knock-on effect. And those, retail, real estate, hospitality are being severely impacted. You go to Asia. On the upside, Asia, countries like Indonesia tend to be more consumers of energy. So there's a bit of a silver lining there. But the welfare system, the healthcare system in these countries are typically not optimized for large-scale pandemics. But that's to some degree countered by younger, maybe healthier, stronger population. So that's one sort of upside. But again, on the negative, Asia is much more dependent on tourism and hospitality sectors, and these will not recover for a while. So in those countries, those are the sectors I think will be sort of severely pressured, for the next sort of 3 to 6 to 18, even 18 months as we go forward.
Thanks, Khalid. In a way, you've segued to the second question, which I'll repeat in a moment or two. But I was reading some material before coming on
months as we go forward.
Thanks, Khalid. In a way, you've segued to the second question, which I'll repeat in a moment or two. But I was reading some material before coming on live, which was from a futurist who was saying, looking forward, there are a number of key things that need to be debated and discussed. And I think you've touched on some of them, and maybe we can, come back to them under question 3, where we're looking at the outlook. But, there's a sense that both models of government and governance will have to change, that digital nations will succeed where those nations which are not digitized will struggle. There will be a need, conversely, as opposed to the nationalistic rise, for new global mechanisms to be in place. We're very likely to become a much more of a surveillance society, not least of which, we're going to be tracked as to where we go because of who we contacted and so on. And whoever knows, where Facebook is going to go with that. We need to look at what scenarios are emerging. Interestingly, many of the people on the health side now are saying that there will be a return of different strains of pandemic, in months. And in addition, don't look forward to returning to normal. The normal we're unlikely to get back to. So it is really going to be an issue of how we, how we adapt to distancing and, everybody carrying, face masks and hand sanitizers around with them. Let's take a little bit more of a look, please, and I'll turn to you again, Noripah, on which Islamic economy verticals will be affected the most by the pandemic. And Khalid gave us some intro to that. And what types of stimulus packages will help alleviate the shock?
Thank you, David. The verticals has actually collapsed for the last 2 months, whether it's airlines or properties or oil and gas or hotels or tourism, as Khalid mentioned, they all has collapsed, except for 2 powerful industries, which is the glove manufacturing and the technology side. And fortunately, Malaysia is the largest glove manufacturer in the world, so that helps. So the verticals that will be most impacted, in my opinion, would be the banks. What type of banks? Commercial banks. Banks are proxies to the economy. So when this economy collapses, the bank as proxy to the economy will, of course, get the multiplier effect. And the irony of the whole thing is banks have been working very closely with their clients in support of balancing between livelihood and life in giving moratorium to their payments. Some banks have given 6 months moratorium of no payment on their loans, and some 9 and some 12. So the banks currently do not have any inflow, do not have any revenue for the 6 or the 9 or the 12 months, but they're still paying the depositors. The survival of banks would depend on 2 things. One is on the amount of reserve they're having now, and 2 is on the credit quality. But I know of some banks whose reserve cannot last for the next 17 months if they continue to have clients who is unable to pay for the next 12 months. So this is not just a credit crunch for the banks. This is requiring a very close focus on liquidity risk as well as cash flow of the bank before even talking about profitability. And if you talk about these stimulus packages, you can split it into 2. The stimulus packages can cover stimulus for the livelihood and also stimulus for the life and death. For the livelihood, we can see the subsidy and cash handouts on, the public get cash from the government. There's also the postponement of the loan payments on the SME and the microcredit and the individuals and the corporates, and rent mortgages relief There are free internet, there's loan deferment, there's deferment on tax. And for saving life, the government has been sponsoring and providing stimulus for the purchase of medical equipments and gloves and masks, and the frontliners have been getting special allowances. But what is most important in the stimulus is the food security. The government has got to make sure production of agricultural products is there to make sure life and death is being protected. So the way I look at it, this stimulus can be the basis for probably a new economic model.
Noripah, thanks for that. I mean, I'll pick up on the new economic model, and Khalid, be interested to get your points. I mean, your credit background. I'm not trying to put you on the spot here, but in a way, I am. That, you know, Noripah's insights and the impacts on the financial system. You know, how serious is that going to be? But Noripah also touched on, you know, issues of sustainability, the food security. And the fact that, you know, is this an opportunity, which maybe we should move on to the third question in a moment or two, but I'm preempting it slightly, that there are real concerns about the supply chain, the security of the food, and the nutritiousness of the food. You know, is this an opportunity or a blessing in disguise, hard as it may be, to actually reassess, you know, how we go in terms of the financial model, the real economy, and sustainability. And I put you under pressure, so you've just got a few sentences to answer what is an incredibly complex question.
Sure, like you know, these are topics that could fill an afternoon, but I'll focus on, you know, the banks and the stimulus measures. As you may recall, I used to sort of manage the Gulf banks, you know, in my previous life, so I've got some good insights there. I'm actually less concerned about the banks. Banks had a pretty big wake-up call in the last global financial crisis. Compared to how leveraged they were and how risky they were a decade ago, they are much more sort of resilient and liquid and capitalized than that previous period. But more importantly, banks are reasonably sophisticated actors in this crisis and are reasonably easy to support. As we're seeing all over the world, central bank comes up, gives you free liquidity, and it's reasonably easy to help a bank that's in trouble. So I'm not so much worried about banks, and as we've seen in the US, as we've seen in Europe and elsewhere, you know, the central bank will make available money for free in perpetuity because they know how important, exactly as Noripah said, banks are accelerators to the economy. They're a magnified view of the economy. And so what happens to a bank has an outsized effect of that. That moral hazard means that banks do take advantage of that positioning sometimes. But like I say, the last crisis, I think, was a wake-up call. So here, actually, I think the financial system isn't really the epicenter of a crisis here. What I'm more concerned about is the sort of last mile, the local community, the individuals, people that work in retail, people that work in shops, people that work in restaurants. There's a lot of people employed in the informal service sector that aren't even necessarily banked. These people can't survive in isolation. They don't get sick pay. There's no social welfare. So what's really, I think, an issue, a lot of these massive stimulus measures that are coming into play are massively benefiting stock markets and credit markets and equity markets. Most people that have assets in those markets are not low or middle to low income. You know, those are people that probably have, you know, white collar jobs, probably have sick pay, probably have savings. And so it's a paradox at the moment that the markets are raging like going up, you know, the fastest rate ever when we're looking at probably the biggest economic contraction since the Great Depression. And that's really going to hurt people at the bottom of the food chain. And that's where I think the stimulus measures are failing in that regard. Now, emerging market countries where a lot of the Islamic economies are based, they have a much weaker welfare system, a much weaker healthcare system. So I would hope that the stimulus measures would really focus on areas like microfinance or SMEs and these areas where you know that the people you're helping are people who are on $500 a month income. So I take a slightly different view, I think, to Noripah there, that, you know, stimulus measures, support measures need to make sure they get to that sort of last mile of the community, and to make sure that these people are not going hungry, and that ties in a bit with the food security. Just one other thing I just want to touch upon, which in terms of that, again, that local community and that sort of low-income population, we've focused a lot on the physical effects of COVID. You know, people are getting sick, you know, but two big issues here around financial insecurity and isolation are mental health, you know, depression. These are themes that in emerging market countries, in a lot of the Islamic economies, healthcare systems have very little capacity to look at the mental health angle, and to deal with financial insecurity and isolation as two big causes. And in some countries, it's even stigmatized. So I think that's also a crucial area of social welfare that needs to be considered in the current environment.
It's
David, can I
of course
add for a minute? I'm in agreement with what Khalid mentioned on the stimulus for the last mile, and I would want to link this with the heart of the Islamic economy. The heart of the Islamic economy is trade and entrepreneurship. The revival of tangible services, which is the manufacturing and the agricultural. So the SME and the microfinance, we need to protect and revive them. I agree, we need to forget the supply chain, the global supply chain, which has been bringing quite an amount of strain in terms of the production process itself. We really need to bring back activities that's closer to the nation. Yes, I agree. A lot more nationalistic in that sense, Khalid.
Yeah, and here's here's an interesting conundrum. Is that, you know, on the one hand, I sense that, you know, nationalism could be good, as you've mentioned there, and perhaps it's localism, and focus on local food supplies and, you know, the halal supply chain and clusters and so on and so forth, and perhaps even focus on, you know, back to basics in terms of, you know, crop nutrition and so on and so forth. But on the other hand, you know, there is a generic global problem about access, or SMEs getting access to, you know, to financing and to capital so that they can continue. And it's not just about, you know, providing localized jobs and food supply, you know, and something we can touch on, I think, in the final segment before we open up to general questions is, you know, the investment which is going on in terms of R&D, or which should be going on in R&D for digital type development, you know, in telecoms and technology. You know, the solutions are out there, but they're not likely to surface immediately unless investment is made into those sort of companies. So I'll throw that back to you to see any closing comments on the second question relating to, you know, the stimulus packages and the impact on the verticals.
Is that a question?
Sorry, Daud, I just wanted, because like on that element that you mentioned on, you know, Islamic economy and Noripah's point on trade, etc. This is where I'll have a bit of an axe to grind in terms of, you know, the Islamic banks. I mean, ostensibly, you know, this is part of their function to sort of really help that last mile of communities. But if I look at Islamic banks in general, at the moment, I don't really see their crisis responses as being very different to commercial banks. You know, what are they doing for these local communities? What are they doing to help SMEs and to support these MSMEs? I see it as more risk off in the current environment, and so I think you know, the Islamic banks could do a bit more in line with their ostensibly social underpinnings to support those local economies and provide that local stimulus measures. I think I saw a piece that Dominion Bank of DBS of Singapore is offering free health insurance, you know, and you know, payment holidays and things systematically to customers. I don't necessarily
when you talk about Islam,
to customers
against the R&D, digital. Connecting David's conundrum with Khalid, I think what's missing in the commercial bank is the ability to provide equity financing. The commercial bank basically offers debt related. And the commercial bank do not understand that when you talk about Islamic finance, it is financing trade, it's entrepreneurship. Even if they understand, I think they need to really challenge the mindset of the shareholders, Khalid, because the shareholders has got a different mind. I mean, the shareholders are not traders for a start, you know. So it has to be, I mean, if you talk to Sheikh Nizam Yaqubi, for example, he will definitely agree with us that commercial bank is not in the business of doing Islamic finance. It has to be an investment-related banking that will be doing trade and entrepreneurship. That's the heart of Islamic economy, really.
Noripah, thanks for that, and that helps us move on to the final segment of the formal questions, which is how does COVID-19 provide the opportunity to innovate and grow the Islamic economy? And I'd like to hear your options, but let's just focus initially on this first one. Is that is the global financial system broken? Is there just way too much debt? Debt is dragging us down. And is this an opportunity for the Islamic economy to move into much more risk sharing and equity-based trade type transactions in order to recover? And what, where is that going to come from? The leadership probably isn't coming from Islamic banks, as you've mentioned, because they're just following what the commercial banks do pretty much. But is it going to come from government policy? Is it going to come from central banks? Where is the leadership going to come from to change the model? Because from where I sit, and I'll stick my neck out here, the global financial system is broken.
Thank you. Yeah. So we have gone through the linkages post-COVID based on the challenges we now see a large scale of opportunity, and really to manage the effect of COVID, and I think we need to relate it together with climate change. To manage its effect, it requires human behavior, change in human behavior, wider economic context, reduce the non-essential manufacturing and production, and also a reduction in economic activities. So in my opinion, the need of the hour is to bring together development agencies, the government, the civil societies, the private sector, the regulators, to protect the livelihood and the life. Because Islam asks us, don't destroy society. In fact, in Islam, when you say the word deen, what is the aim? The aim is to benefit society by providing a level playing field. And this opportunity that is given to us now is the opportunity to make sure there is a level playing field amongst the society. In terms of leadership, I really think there has to be a huge coordination between the government and the private sector and the development agencies, the national government and the civil society and the whole private sector. I'm like you, I'm a little at a loss in identifying a global coordination of leadership for an Islamic finance and Islamic economy to go forward.
Okay, thanks for that, Noripah. I mean, I share your concern, and I think if I go back to Chinese philosophy, where it says here, when the student is ready, the teacher appears. And I sincerely hope the teacher does appear, but that is going to be a huge challenge. But somebody's going to have to step up to the plate. Khalid, I'd be interested in your views, particularly on, the mountain of debt and the global financial system. And have I stepped out of line?
No,
stating
no
that,
doubt. I mean, look, you've touched upon a subject that that's dear to my heart. I mean, look, developed markets have built an economic system based on debt-fueled consumption. The idea that you buy things that you don't need with money that you don't have as a supposedly a sustainable means for growth. It's very bizarre that the world economy is collapsing because people are only buying what they need, which is a sad situation to be in. So I think for the longest time, until the last crisis, Asia, Middle East, Islamic economies were looking towards these developed markets as role models, as economic role models. We've had two crises within the space of a decade. Now, COVID is just the trigger for this crisis. It could have been anything else. There'll be environmental issues, health issues, things will be coming up. But why is the world economy so fragile? It's because we've become addicted to debt. And central banks are distorting the cost of debt by making it free. So countries, corporates are leveraging and leveraging. And what that does, it makes you very fragile. And the slightest, hiccup or economic accident triggers a worldwide crisis. Why are global economies so fragile? Why can't they spend on healthcare? Because their budgets are being cut. When you have so much debt, there's only two ways to fix that. Either you raise taxes or cut services. We all know how people like taxes. So what they do, they cut services. And you're seeing the impact of longer term cuts in healthcare with the lack of preparation for a pandemic that, as Noripah says, I'm sure will come back again in the future. So in that regard, these crises are highlighting that actually maybe the debt-fueled consumption approach is not the best way forward, that maybe other alternatives, and this goes back to Noripah's point, which is absolutely correct. Banks are necessarily not good at the Islamic economy because they're good at lending, they're not good at investing. And so is this the right time to shift the mindset a bit to that kind of equity type investing in small businesses and entrepreneurs, which banks aren't good at, but necessarily they are major key actors, sophisticated actors in the economy. Could they be setting up divisions or subsidiaries just to focus more on this type of finance? Not to make it a plug, but this ties in a bit to technology, but some of the work that Blossom is doing is exactly trying to provide that type of risk sharing, genuine profit sharing financing. And I think there is an opportunity there for the Islamic economy to move away from this debt-based model, not because we think Islamic finance is better, which, that should be a key reason. But when you see developed markets blowing up, it's like, well, actually, maybe that isn't the right way forward. Maybe it is time for an alternative. And I think this creates a new narrative where I think the Islamic economy, genuine, sincere Islamic finance, that in my view is more about investing and startups and entrepreneurialism and these types of activities, has its time in the sun. And I feel, just to close the point on the global economy, the increasing debt is amplifying the scale of each crisis. And if this isn't the one that brings down the world economy, there'll be another one in another 8 years. And if this isn't the one that brings down the world economy, there'll be another one in another 8 years' time when debt will be even higher. And, I think things, it's not broken yet, but I think it will break. And I think, unfortunately, as human beings, it's only when things get really bad and we're maybe staring at the abyss do we decide that, okay, we're going to change. But I'm hoping, that the values of Islamic finance and economy pull us away from that brink, earlier, rather than looking down into that hole. There's some ideas there that I think really can work, and the Islamic economy and finance can really push in that direction. I think the timing COVID is a nice accelerator for that thinking.
Khalid, thanks for that. I'm in profound agreement with you. I mean, we kind of missed the opportunity during the global financial crisis, and the chances do come, and they get worse and worse, as this one I think will demonstrate. So we do have to take the opportunity, and we do have to push forward and demonstrate an alternative point of view. Because there is a burning platform there now, and quite simply, I don't believe it can go forward. But it's about articulating the point of view, which you've actually put across very clearly, but is getting more people not just repeating that, but getting that into the mainstream media. We move away from, well, it's just the Muslims talking about this, and they're nothing but troublemakers, which I'm afraid is still very much the issue under certain areas of nationalistic governments, to actually say there's some very constructive ideas in terms of using equity, in terms of social finance, the mobilization of capital efficiently and effectively. And we need to see how we can mobilize that. Now, we've got a few questions from the audience, and I'm going to try and get through as many as we can in the next 15 minutes. But here's one. Interesting on your views, that will we be seeing more consolidation, mergers and acquisitions in the Islamic economy as a result of the crisis, and which sectors are more likely to witness more consolidation? Whichever one of you would like to jump in on that. So it's about, are we going to see consolidation, and where are we most likely to see it?
I think, Daud, I think absolutely. If you think about regular corporates, regular businesses, they're all suffering. And so there's a massive discount to valuations. Now, when you have that discount, you can take a view. Is this going to be a short-term crisis or a long-term one? As soon as you have the ability for different buyers to express different views, then there's a market. And so I think with a lot of hospitality, tourism, airlines, retail, a lot of real economy sectors are actually underpriced depending on how you look at it. If you think it's a short term and the economy will bounce back in the fourth quarter, well, then now's a great time to merge, consolidate, and have some takeovers. If, however, you think this is a longer term issue, you'd be a brave person to sort of put your money on the table right now. So I think there's a nice opening for different views, and I think that will drive increasing M&A and consolidation activity going forward.
Khalid, thanks for that. Noripah, is there anything you want to add to answer that question on
yes, I just need to add two things. Number one, when we talk about consolidation, it's something that we are looking forward to, because Khalid mentioned about the airlines and the hotels, and they not only need to consolidate, I think they need to re-engineer to narrow down, because we will have to go ahead with the reduced human activities. The airlines, for example, what is COVID telling us? COVID is telling us some jobs are just not essential, right? So COVID is also telling us we need to protect life, and there's serious deficiency in the way market and profits is being built. So we need to build a system that's resilient to future pandemic and also climate change. So I can imagine example, the airlines will have to really configure the seating position for the passengers, And that needs quite an amount of consolidation amongst themselves to make sure that they can survive. So going forward, it's not just the airline. And I imagine we also need a very active involvement in the circular economy. We are not talking about cradle to grave. We are talking about cradle to cradle. We are talking about the recycling of products. So at the end of the day, we need to answer the question on how to shape a more resilient, socially just, and environmentally safe world.
Noripah, thanks very much for that. And I think if I might add, one of the big challenges here is that everybody is going to moving. And I go back to your opening remarks where you said there would be resistance to change. Some people are at levels of just complete denial, whereas others, and they're in the minority right now, are in a level of acceptance. And it's the challenge will be getting more or less everybody onto the same page and accepting that there will be no return to normality, that there will be a new normal, which we've yet got to define. And that is going to be based on, the recurrence of pandemics, on the economic reality, on supply chains, on food chains, continued social distancing. What are we going to do when we greet each other? How are we going to meet? How are people going to get educated? And the list goes on.
And also, David, most important, as you list down two very important things that needs to be mentioned there. We realize that we should not be dependent on supply chain, but that's two very important, significant policy response we need to attend to, and that would be food security and the healthcare security, included in your list.
Okay, well, we can do that. We've got some more questions, and we've still got 10 minutes or so that those listeners who have yet to ask a question, we can still try and accommodate you. And if you don't see the Q&A box on the top right, I'm advised if you refresh your screen, it should come up. But we'll try and take your questions. Here's another one. COVID-19 has triggered shocks in different financial markets. For example, oil negative prices is a very good example of that. What other markets do you think are a big risk for further disruption as the COVID-19 situation continues, or other pandemics happen in the future? Where may we be most at risk?
I think, Daud, I think we've covered that to a degree. I mean, yeah. Any markets that are driven by consumption, we've seen that we can function without flying around, without driving around. So all of this energy-based consumption, I think, industries that relate to that will be just as impacted. So we'll probably be repeating ourselves a bit, I think.
Yeah. Okay, I think we probably address that reasonably well. Let's take another question from the floor, which again may be directed to you, Khalid, but I'm not excluding you, Noripah, because I'm sure you have some views on it, because you have a long track record in asset management. More institutions appear to be reluctant to issue sukuk at the moment. Is the COVID-19 crisis endangering liquidity in Islamic markets?
I think, look, the whole sukuk volume, the whole sukuk story, fundamentally, there's an issue. If you look at, for example, the Gulf countries that are anchors in terms of Islamic banks, they've borrowed hundreds of billions in the last few years with oil prices being low, but they don't issue sukuk. Why is that? Because it remains a marginal market, a fringe market. When you don't have a big institutional investor base, that's not going to change, unfortunately. So if the Islamic economies and countries themselves are not active supporters, both in terms of issuance and sort of investment allocation into that space, I don't think you can expect it to grow beyond that. Why don't they issue more? Well, sukuk, as they stand at the moment, 97% of them replicate the performance and risk characteristics of conventional bonds. So if your goal is to actually raise money in the debt market and the bond market, you go and you issue a bond. So when Sukuk don't really have their own economic identity, I don't actually really foresee them becoming a large liquid market. It will always be something a bit at the fringe, unless policymakers make it a deliberate objective to grow this market. But I think Sukuk, they're meant to be more, let's say, asset backed. They're meant to be more sort of ideally profit sharing, equity like characteristics, which doesn't fit with the debt market. Going to the issue of liquidity, it is an issue for Islamic banks, and that's why they tend to hold much higher balances of cash, which then turns to be a bit of a drag on profitability. But this is where, frankly, central banks have a role to play as that liquidity provider. And I think central banks have a pretty good handle on things from the last crisis. So I think if push comes to shove, they will always be able they will always be able to provide liquidity to the Islamic banks as needed. So I'm not necessarily worried so much about illiquidity in the Sukuk market. It's more of a kind of profitability issue than an actual risk type of issue for the banks.
Okay. Here's thanks.
Can I give a challenge to Khalid then?
Okay. Go ahead.
Khalid, I just want to progress on sovereign debt crisis. The next thing that's going to happen post-COVID, the sovereigns will have to restructure their sovereign debt. And I was reading somewhere that 79 countries that will have to look into restructuring their sovereign debt. So can I challenge you to encourage these sovereign debt issuers to go into Sukuk? It's an opportunity to actually have a huge pool of Sukuk issuers, by virtue that if it's not Sukuk based, which is going to be going back to basic, at the moment, people just fear. I'm not a bond trader, but people would fear buying a bond compared to buying a Sukuk now, isn't it? I mean, investing in bond compared to investing in Sukuk.
Yeah, so I think we'll have to agree to disagree on that one, because look, fundamentally, who is it that has the power in markets? It's people with the money. And if you think about the funding available for conventional investments, it's orders of magnitude greater. I mean, even, you guys are in Malaysia. I think the EPF, their Sharia allocation is, I think, 5%, mandatory. So if your own pension funds and sovereign wealth funds, I mean, in the Gulf, there's no mandatory allocation. So fundamentally, the amount of money available for Sukuk is far, far lower than a bond. So if as a country, I'm going to restructure my sovereign debt, I'm going to go for the biggest market. And that is still, by a long, long way, it's not Sukuk. The only way you can change that equation is by having more investment liquidity held at Islamic banks, held at Islamic mutual funds. The Islamic Hajj funds they can only buy sukuk, for example, but still they're a marginal investment base. So I don't think that picture, as a rational person restructuring my debt, I need to go for the biggest market, and that's not sukuk. Now, one thing that you've triggered a thought on. Now, for a country, issuing debt doesn't necessarily solve the problem, the same way that we need more equity type approaches for individuals and small businesses. If you're helping to restructure a country, in a perfect world, there would be more type of equity type of, let's say, sovereign sukuk, which says, look, if as a country your economy is doing well, well, then you pay me back more. If as a country you're well, well, then you pay me back more. If as a country you're running through a pandemic or a crisis, then you pay me back less. And then we are aligned in terms of best interests, in terms of the health of the country. You want the country to well. At the moment, we're addicted to a model that says, I'm going to put you under a massive debt burden, and you will pay me back before you start to invest in public services, before you start to invest in healthcare, before you start to invest in your own economy. So debt creates a very natural tension between what is good for the country and what is good for investors. And I think it's that opposition that we need to fix also at the sovereign level, not just at the microfinance level as well. It applies across the whole value chain of debt and financing.
Khalid, thank you for that. I think we've got time for one brief question. And on that topic, maybe it's another topic we can have a webinar on in terms of liquidity and how we structure that, because there's we can't do justice to it in the remaining 2 or 3 minutes. A final question before we wrap up, and answers briefly, please. What role could Islamic financial institutions and their Sharia boards play in terms of getting on with the transition and the restructuring for the brave new world? I'm referring to initial steps taken in Malaysia around value-based intermediation, but to what extent should the assessment be made from a Sharia standpoint of acting in Muslim terms as khalifas, as stewards of the planet, and a duty of care overall? Is this an area where Islamic financial institutions perhaps can expand? I hope I've done justice to the questioner. There was quite a bit of material there, but effectively, could and should the Sharia board be doing more to push the financial institutions in that direction? Either one of you.
Sure, I'm Noripah. I'm happy to answer, but
Oh, go ahead.
Okay. Look, I would say to some extent, look, Sharia boards, Islamic banks are almost like servants of the people or servants of shareholders. And it's hard to be a steward if the flock doesn't necessarily want to go in that direction. So if if this is why you ostensibly elect a government that represents your interests. Now, it's for governments, we may call them the elites, representatives of the people, who are ideally, more learned people, more, people with a longer term view, to take a view that, look, this is what's good for the country in the long term. How do I pull together the actors and the players to make that vision happen? And I think once you have a public policy mandate driven by the people to say that this is what we want, then it's for those actors, and I think Malaysia's been quite strong in that regard, of that top-down approach to say, look, we don't want to go in this direction. We want to go in this other direction. Let's get the Islamic banks, let's get the Sharia boards, and let's get them all together and say, as a country, this is where we're going to go. And obviously, people will look to these Sharia boards for guidance. But I don't want to say that. I don't want to say they're powerless, but I think their ability to influence, the sea of public intent is harder than we think, and that's why we elect governments to take us in a particular direction. And so I think that's probably the way that it would happen, top down, with them a critical leg and a pillar of that initiative, as opposed to the driver of that initiative.
Understood. Noripah, final word at all on that question, or anything else, because we need to wrap up after this.
Yeah. On that question, I have 3 sentences, which is a very tactical comment, not as strategic as what Khalid just mentioned. My experience, especially in the bank where I have been a chairman recently, with Sharia Council, is that they are focused on a very narrow role of just Sharia compliant. And it's actually very important to bring them up to the next level, to integrate and to converse as often as possible, and to have common meetings with the board of directors who has the blueprints for the bank, the direction for the bank, the defined destination, and there could be some aspirational evolution, which the Sharia Council of the respective banks were actually not communicated, as well as not being able to see on the same page with the direction that has been led by the board of directors.
Okay. Noripah, thanks on that. That's probably another topic for another webinar. But we come to the end of our webinar, and I'd like to first thank our guests, both Noripah and Khalid, for their time and valuable inputs, and to also thank our audience for joining us and interacting with our speakers. And thank you for the great questions, which we have plenty of, and I hope those of you who didn't have their questions answered will bear with us and well, say better luck next time. But thank you for the good questions that came through. Before you leave, don't forget to rate the webinar below and share with us your comments and constructive suggestions. And on the right of the screen, you will also see upcoming webinars in the coming days and weeks. Be sure you click on each webinar to set a reminder and don't miss any of our sessions. Please stay safe, everyone, and we'll see you next time. Assalamu alaikum wa rahmatullahi wa barakatuh.
Well,
yeah.
thank you very much.